Yeah, I mean, I'm not a guru in this topic really. I'm trying to put up my slide now, but I'm just someone like you. The only difference is I decided to take investing seriously, just like every other thing you take seriously. I took investing seriously, and yeah, it paid off, right? So I'm just going to share a bit of how I did it. Can you see my slide?
Yes, we can.
Awesome. Yeah, I'm an active investor. I've been Yeah, so just quick story. I Some years ago I was just interested in this whole investment thing and how some people end up being investors, right? So I thought of how can I get into that space? And this was like 15 years ago. I always get excited when I see people like Warren Buffett and the likes, Bill Gates. I just thought, hey, how can I be like these guys, you know? And then fast forward to around 2016, I started investing, taking a bit of risk here and there. I'm just going to move this slide along as I speak. Just let me know anytime you can see this slide.
Okay.
Yeah, I don't know what the house rules are. Are we asking questions? Are we as we go? Or
No, it's in your court. Which one do you feel more
yeah, I
comfortable
prefer
with?
to take questions as they come, right?
Okay.
Yeah, so I started investing little by little, and then yeah, it was going well. I decided to continue in that space. So today we're going to learn how to start as early as possible. I mean, I always get, I don't know, uncomfortable when I hear this early as possible. You know,
Why?
young people, that it makes you feel like, oh, it's too late for me. Right? But I mean, anytime you start, you always, and I'm going to show that you can make money anytime. It doesn't really matter when you start. I'm going to show the investment options as well, and then some strategies we can pick on. I mean, it's not a financial advice. We're just like I said, I'm just a regular guy that decided to start investing. I'm just going to show you what I do. And yeah, it's been working. Last year, I was able to make about 56% in returns in the stock market. And over the past 6 years, I've been doing consistently 50%. So it's not a financial advice. This is just for education purpose. Look, investment comes with risk. You want to consult your financial advisor definitely, or do your own research, right? Just like me, I do a lot of research and then I go, right? So this is my crew to the right. On the left hand side, I was in banking back home, just like most of us, I'm sure. Um, right. Yeah, medium to long term investor. I don't do trading. I have a bit of knowledge about how to trade, but I don't do trading for some reasons anyway. I'm also a licensed financial advisor. Like I said, I made 56% last year. This year, I hope to make much more. Not I hope. I've made some moves that will help me make much more. Most importantly, I'm a passionate educator. I just like talking about this topic. It's just what I love. I love discussing. So feel free to ask me questions. Yeah, I love traveling like most of us. I'm sure Oka loves traveling as well, and Grace, right? So we're
Yes.
going to talk about how to make this money. I love UFC. I love sports. I don't know anybody that is into UFC sports. Hit me up. We can talk all day about it. All right. So moving on now. I mean, some years ago, I did some research and I found out that the richest people in the world, as we know, there are three ways they make money basically, right? I was in some space recently, and they were talking about some numbers. They were talking about millions of dollars. I was like, wow. And most of them were business people. So I thought to myself, can an employee actually talk these numbers? Can you actually mention $1 million because you know what you earn, and you might not be able to make that sort of money in years, right? So three ways to make money really: uh, um, business, right? You want to go into a business. You want to try to support your friend's business as well. You want to do real estate, right? Most billionaires most millionaires, they go into real estate for rental income. When the property appreciates, they sell, right? And then some people do stock market, they invest in stocks. So yeah, we're going to talk about one of these things, which is of course the stock market and how you can make money through it. Okay, so moving on. Let me see, how do you move this now? Okay, so again, these are the guys that inspired me. Like I said, you know, the Elon Musk of this world. You see their net worth there. Jeff Bezos, Mark Zuckerberg. I was just looking at the chart this morning and I saw that Mark Zuckerberg has moved from being number 4 on that chart to number 3. So they keep moving up and down the chart, right? But the important thing in this slide is not to get us uncomfortable, but to inspire us, right? And if you want to start investing, one of the things that gets people confused is, where do I start from? Okay, so this basically was where I started from, right? I just thought, hey, these are guys that are already established. They're already making money already. They are always on the charts. And if I invest in their business, if you look to the right, you see the most capitalized company in the world, Apple. We all have Apple phones. And when we buy these phones, people are making money. Apple company is making money. Apple is worth $3.4 trillion, right? So, I mean, that's crazy. Most capitalized company in the world. You look at number 2 there, NVIDIA. We might not be very familiar with this company, but again, when you buy most of the tech products these days, when you do your ChatGPT, they make money because they basically provide the infrastructure, the GPU for those companies to function. So we need to understand how these guys function, and then we'll be able to invest money in their business, right? If you look at number 3 there, Microsoft, they've been in the chart for forever, right? So now, how do they make money? You want to invest in their company, and just when you invest in their company, when they make money, you make money automatically. You don't need to do much. You don't need much. You don't need to learn much to get started with them. So you have this other company here, Alphabet, the parent company of Google, right? You have number 5 there, you have Amazon. We all use Amazon. You have Meta. We use Instagram. We use Facebook. So you want to use these products and make money when the companies make money as well. So that's for me. I mean, it doesn't get more complicated than this. It's all about using the product investing in the products that you use, basically, right? When we live here, when I live here, I'll probably go to Instagram and look at some pictures. You want to make money when people are clicking on these adverts on Google as well, right? You probably will go to Walmart to shop. Walmart is worth the capitalization there is 593 billion, right? We all use Procter and Gamble products for our kids, right? We all dream of buying Tesla, right? We all go to Costco. So these are the basic companies that run our daily lives. So we can put our money in those companies, and then when they make money, you make money as well. So that's it in a nutshell. I'm going to move on to the next slide, which talks about a bit more about these companies. Get started as early as possible. So you see over here, I'll tell you, fun fact, I started investing in 2016, actually, but in 2019, I became very active at it, and it really paid off because that was a bit before COVID hit. And if you look here, Meta in 2020, if you were buying one share of Meta, is worth $156. Let's do some math here. And this is going to introduce us to how you make money in true stock markets, right? Now, today, Meta is worth about $576. That's what you pay for one share of Meta. If you want to be a shareholder, if you want to buy one share, $576. I mean, it's only $576 because it dropped, what's happening in the country, in the world now, the whole tariff thing. It was 736 some weeks ago, right? Now, but let's take the number 576. What this means is that if you had bought Meta in 2020, 5 years ago, you would have done 267% interest. 267% returns. It's not,
Wow.
don't look at these numbers as unreal. People are making the money. And trust me, I didn't buy Meta, but I bought Tesla. So if my Tesla was up 668%, right? So if you put $34 for one share, just imagine if you had bought like 10 pieces of this, how much you make. You can do the math, right? So over here, NVIDIA, this is the most mind-blowing. But of course, if you miss these opportunities, it's actually understandable because they were not a big company at that time. Let me just give you a quick intro about how the whole NVIDIA thing works. Your computer, right? Have you thought of how the computer functions? It's a combination of hardware and software, right? Now, someone provides the software component, another person provides the hardware. You would see in your computer where it's written Intel, right? These are guys that do hardware, right? So now, if you look over here, NVIDIA, they have the best GPU, graphic processing unit in computers these days. And all these other companies that are into computing and tech, they are all customers of NVIDIA. So this is a very significant company. And I say that to say, any company I show here is just companies I'm interested in and I'm invested in also. And I think they are very good companies to go into for beginners, right? So I got this from Yahoo Finance. Assignment number one, please download Yahoo Finance. Even if you're not investing, you want to go in there to read up just to see what's happening, see companies general overview. Trust me, when I started, I wasn't even investing. I was just reading. I was just interested in that space. And you know how the whole technology works these days, right? They've taken over our lives. I don't know, maybe if you're thinking of something, when you go to your Instagram, you see it on your live stream. So
Yeah. I thought I was the only one that it happens to.
honestly, so I was thinking of buying a bookshelf like yours, Oka, recently, and I went to my Instagram some days ago. I was seeing bookshelves. I was like, what's going on? So now, if you go and start searching about these news, if you go to your news page, you're gonna see the news coming up on your page, and that's what will fill your page. If you think about entertainment will fill your news stream, right? Yeah, so that's how we can build that sort of reading and researching. Um, yeah, if you compare these returns to long-term GIC, which is at 3.7%, if you ask yourself, which one will actually make me rich, right? Which one will actually get me above inflation, which is like should I call it the devil that is chasing everybody. So if you do your GIC at 3.7% and inflation eats up the money at 2%, what is your return really? So basically right now, personally, I don't keep money in savings accounts. I don't even keep what they call emergency funds. Even if maybe I can advise people to do it, but personally, my emergency funds, it's in these stocks you see right here. And that's a personal decision. But please keep your money in emergency funds, keep your money in savings account. The right thing to do. So now, but you want to take this very seriously because inflation is real, right? If you buy bottle of Coca-Cola, I don't know what it is, maybe 5 years ago, maybe $1, today is $3, and you keep complaining, oh, what happened? It's just inflation, right? Cost of things will keep going up. So you want to make sure your money is always beating inflation, right? Now, 5 things you want to look out for as a beginner. You need to understand the business you're going into. We've talked about this already. Is this something you believe in, right? Do you believe in technology? Do you believe in healthcare? Do you believe in cosmetics? Oka is looking very fine. I don't know the brand of the cosmetics she used, but someone told me about, I don't know, Sephora or something. So if you like those brands, you want to go and research them. You want to check out which company makes this Sephora products, which company makes this brand of my clothing that I like, this handbag that I like, um, which company is into it. Like if you like a Louis Vuitton handbag, you see, we show this slide right here. You see the guy that is into Louis Vuitton, right? He's in the chart right there, number 5. Okay. So you want to look at the products you use every day and try to put your money in it, right? Now, you want to look at the financial health of the company. And I've put some resources where you can see all these things. They are all available for you to read up, right? Is the company profitable? Are they just making revenue and their expenses and debts are taking up all the revenue before you invest? You want to look at those points also. What's the growth potential? Do you think that industry is going to grow in the future? Right? I love the tech industry. I'm sure you can tell by now. Yeah, because I think the technology is ever evolving, right? I was going to buy a TV recently. Sorry, I like telling stories too much. So I was going to buy a TV recently, and I thought, oh, I was going to buy one that is really, really expensive. I saw it in Costco, and I felt he's been in the market for too long. So I said, hey, let me just wait. They're going to release a new one. Technology is ever evolving. Whatever you buy now, they're going to release a new one. So that's a good industry to go into, right? You want to go into the healthcare industry. That's my second favorite industry, healthcare, because people are going to get older. People get older these days. People live up to 90 something, 100 plus, right? So people are going to need healthcare products. There's actually a healthcare company I love investing in. I'm just going to go 2 steps back here. This company, Lilly, they're into, they make drugs for diabetics, right? They do a lot of drugs for diabetics and heart conditions, this Lilly company, and they are worth 830 billion. And they are doing a research right now on cancer. If they release that drug for cancer, I mean, the company value is going to shoot up real high. So if you invested in them, you're going to make money as well, right? So what competitive advantage does the company have? Do they have unique product? Is the brand strong, right? I mean, there's hardly any brand that can compete with Apple in this part of the world. So you know that they have competitive advantage. You know that some top brands that have competitive advantage and customer loyalty, you want to go into those companies. If you want to invest in, I mean, a technician came here recently to fix my internet, and he said he was from Telos and it was good customer service. And I just thought of it, how come it's only, did I use Telos or use Rogers? There's no competition really. So they have competitive advantage, they have customer loyalty as well. And I did some research about Telos and I saw that they are one of the highest paying dividend companies in Canada, right? So at every touch point, you want to research the brand and see what's going on, right? Okay, so you also want to make sure it matches your goals. You want to do short term, you want to do long term. There are some stocks you want to do short term because they are not really, their business proposition might not really be that strong at that point in time. So you want to do them short term. Okay. And yeah, so that's it. So you want to look at these resources and get some more info from there. So moving on. So this is me, my Costco. So you see, when I came to Canada, I never heard about Costco really. And so when I came in, I wanted to go and shop, and then they said I need a membership. I was like, why do I need to be a member to buy from you? Just imagine you open a boutique and you're telling people that before they can come and shop from you, they need to be a member. It takes a lot of guts to do that. You have to know what you offer. So I had to do research. I said, who is this guy? Who are these guys, Costco? So I found out, as at that time, that was sometime around 2023, one share of Costco was around $530. Today, it's at $929. Okay? So these are brands that people go to. And surprisingly, when I went into Costco, I was like, that means nobody will be in this shop. Oh, I went inside and I saw a lot of people were shopping. They have loyal customers. So that was what got me interested. I decided to do that research. So I say that to say that any brand you see that people are flocking at, you want to find out what's going on there. Do your small analysis. You'll be able to just look at those things we mentioned in this previous page, and then see whether it matches. And then you come over here. One other thing I like looking out for is the company must have done 200% at least in the past 5 years. You can see that Tesla in the past 5 years has done 226% returns on investment, right? So again, I want to also make sure that key institutional investors are putting their money there. So you need to understand how the finance world, you all hear about Wall Street and all of that. You need to understand that these are the guys that run the world. There's a lot of things going on there that everybody, I mean, most of us don't pay attention to, right? So who are the top asset managers in the world? If you look here, the number one is actually BlackRock. BlackRock, they have about $11 trillion asset management. That means they hold all the billionaires' funds, right? And they help them do the investment. They invest in all sorts of products, real estate, other companies. You can see here that BlackRock has about 7.8% investment in Costco. And in terms of actual numbers, that is $35 billion in Costco. I mean, you can go to Yahoo Finance. I just got it from Yahoo Finance. It's a public, it's a public information. So Vanguard, who is the number two, about $9 trillion in assets under management. They have about 43 billion in Costco, right? So if you see Costco, just know that it's a heavy company, right? So you want to look at where these guys are putting their funds. These are the guys that have the best brains in this world. They have the best financial advisors. They have the best guys analyzing the market. And because they have a lot at stake, they can hardly lose funds. And if they lose money, the company will crash. So you want to look at where they're, personally, I always look at where Costco and Vanguard is investing. And then I just go with them, right? And do some other things I told you in the previous screen. And then you want to take a look at those companies they are interested in as well. They don't invest in every business, okay? So you also see your banks over there, Morgan Stanley, and there's a whole about 10 institutional investors. So I want to make sure that at least any company you're investing in, it has to have 70% institutional ownership. 70% of their shares has to be held by institutions, because if so many institutions are interested in buying those shares, it means that it's a strong company, right? You don't want to look at retail investors or maybe the funds will be held by the owners of the company. No, you want to look at institutional investors that are third party and go where they are moving as well. Okay. Now, quick check here. Are we following?
Yes, I
Awesome.
am taking notes.
Oh, great.
Yeah,
If you have any question, put it in the chat box.
I do. I just put one in
Yeah,
the chat
awesome.
box.
Okay, what are the institutional investors? There are so many of them, right? They are basically, so institutional investors are basically institutions that manage other people's funds, right? So if you look at this list here, you can see Vanguard, BlackRock, State Street. State Street are the guys that own VOO. I don't know whether you've heard about VOO. It's a Vanguard index fund, okay? So those are the guys that manage, they are fund managers that handle Vanguard index funds. That is the business they do. They collect money from the public and they help invest in companies and businesses that are going to yield interest. So I'll give you an example. If I feel like I want to open a company right now, I have my license and everything, I can decide to go and open an institution, become a fund manager. And then I tell you guys to give me money, put money in my company so that I'll help you invest. And I promise you, hey, I'm going to give you about 10% returns, right? And then I know where to have done my analysis in these companies. I have experts that do all the analysis in Wall Street. And then I put my funds in these businesses. I get returns of about maybe 20%. And then I pay my retail investors 10%. In that case, I'm an institutional investor, especially if I become so big. But these guys are heavy, they are top level, and there are so many institutional investors around the world, right? Yeah, good question. So, yeah, if you're interested in learning more about these things, you can scan my QR code, join our WhatsApp group. We always have this sort of discussions in there. But if you look here, Warren Buffett, like the grandfather of the market, he always says, look at market fluctuations as a friend rather than enemy. This is something every investor has to do. Anytime there's a market crash, I always get excited, even though my money is going to go down. But I see it as an opportunity to buy more because the market will always win, right? Stock market is a device for transferring money from the impatient to very key, very true, so true, right? So you want to be patient, get funds when it's going down, and then if you want to sell, if you want to use the money for anything to fund your lifestyle, you sell when it's high, right? But I like this one. I heard this some 10 years ago. The best time to buy is when there's blood in the streets, right? What that means is when everything is crashing. It's just like when there's Black Friday. Isn't that when we buy, when we shop? So why is it that when it comes to stock, people like selling when the market is crashing? That's
We're
the
all
opportunity.
scared.
Yeah, you don't get scared. You just stay patient. Unless if you need your money, why not? You can sell. But if it's money you don't need, you want to keep it. But that's actually time to buy. Especially now, if you're into any form of business like insurance or anything, this is time to tell your clients to buy because some of them might look at their plan and they say, "Hey, it's crashing." You want to tell them it's time to actually buy the plan right now. Okay. So moving on. Yeah, so basically for beginners, you want to start with index funds. And like I said, any brand I show here is brands that I must have bought one or two sometime. But it's not really advisable. Like I said, investment comes with a lot of risk. You want to do your own research. That's why I said you need to do research before you go into individual stocks, right? But the key thing here is these brands, what products are they making? They're not just brands that's, you just pick brands off social media or down the street and then you start putting your money. No, you have to do your research, like I showed in previous screen. Who is this guy, CrowdStrike, right? CrowdStrike is a cybersecurity company and they are the number one in the industry of cybersecurity. Okay, so the world is going digital, everything is going tech now. You know that in future there's going to be serious cybersecurity risk. Already it's happening in the US. There's a lot of cybersecurity attacks going on here and there. So this company, they are responsible for protecting these big businesses or creating the infrastructure for the big tech companies to build their cybersecurity and prevent people from losing their resources or their identity. Okay, so we know what Meta does. Meta is going. I mean, I don't know where they are going. They are going really big these days. I wasn't a big fan of Meta, but these days I'm beginning to add them in my portfolio because how many of us heard that Mark Zuckerberg actually said that he was going to stop people from using, what's it called? He was going to replace smartphones. And when these guys make these sort of statements, don't doubt it. I'll just tell you somebody, don't doubt it because it's probably going to happen. Because I was looking at something in social media recently and somebody was showing, do you remember when we were using Nokia phone, right? And if you use it, you probably put it in your belt hook and show it off. And there's this zip. Do you remember the zip casing where you put your phone and then you zip it as a casing? Nylon.
Transparent and to show off
Transparent.
your phone.
So look where we are right now. Okay, look where we are. So he's saying that he's going to replace smartphones. I mean, I was driving down the street the other day and I saw about two cyber trucks drive by. One cyber truck, Tesla, and I felt the whole thing was too futuristic, right? So you see, cars, the way cars are made these days are changing. Very soon, all these kind of cars are going to leave the road. You're going to see cars like this Tesla. You see the way they look. Have you seen BYD car before? It looks like something that that you can only see in the TV or maybe in another planet. But that's where the future is going. So you want to just don't be left out in some of these things. So Amazon, I mean, I can go on and explain this company, but I don't want to take up our time. Amazon makes money from Amazon Cloud Services. Recently, I heard that they actually host Netflix is hosted on Amazon's Cloud Services. So they make a lot of money. Airbnb, they use Amazon Cloud Services. So they host JP Morgan Chase, Amazon Cloud Service. So you can look it up on the internet and find out how these guys are collaborating, right? So that is where they make a large chunk of their money. So D-Wave is like the next big thing right now. Everybody is talking about quantum technology. So they want to make our computer and everything more than 1,000 times faster. And that's one of the companies that is driving it, right? Even though you have Microsoft and other companies driving that technology, but this is one of the core quantum technology stocks out there, okay? But then again, if you want, for a beginner, you want to start with index funds, okay? So what are index funds? Index funds is just a basket of top performing companies, okay? So we all hear about S&P 500. S&P 500 is the US stock market. They came up with top 500 performing companies in their economy, right? Now, what they did is they put them different industries together to make the S&P 500. So you also would have heard about the NASDAQ 100. NASDAQ 100 are the top 100 tech companies, but the S&P 500 cuts across oil and gas, healthcare. You can see here, tech companies there are 27%, finance company about 14%. So you have Visa, MasterCard, JP Morgan, Bank of America in that list. They make up 14% of this 500. Okay, so you also have healthcare. You have all their healthcare company and insurance companies under the healthcare in the S&P 500. So basically, if you put $100 in S&P 500, what that would mean is that you're automatically putting $27 in tech companies. Now, under this tech company, you have the likes of Apple, Microsoft, Amazon, right, as their tech components under S&P 500. So I think Apple has about 6% of S&P 500. That means you would have put around $6 in Apple. So it's a good way of diversifying your investment. What it then means is that if one of the companies in the S&P 500, let's assume you put in money there and you have like Chevron, for instance, and Chevron stock crashes, or maybe Boeing that's crashed recently. If it crashes, you have about 499 stocks again to hold you and make sure you don't lose your money, right? So it's a no-brainer for me to get started as a new investor. And then you have what they call the exchange traded funds, ETFs. So ETFs, how they differentiate is that ETF is now managed by fund managers, and then they track the S&P 500, or rather they mirror the S&P 500. Okay, so if you have an ETF like VOO, for instance, which is a Vanguard ETF, so what they do basically is they try to mirror what you have in this S&P 500. So that, for instance, if the S&P 500 is making about 10% per annum, VOO would have bought stocks that are in S&P 500 in the same distribution to ensure that they make as much as, whatever S&P 500 did. So that is how it works. And then you have other companies that are now managed by fund managers that then try to focus on specific industries. So there are ETFs that handle tech industries only. There are ETFs for semiconductor called SMH. Sorry, I didn't put it here. SMH, and they have about 25 semiconductor companies. They have the likes of NVIDIA, AMD, all the semiconductor companies in there. Okay, so if you feel like semiconductor is going to change the world, you want to buy semiconductor ETF instead of buying just NVIDIA. You can buy a semiconductor ETF like SMH, where you have NVIDIA, you have TSM. Have you guys heard about Taiwan Semiconductor? Very key company in the world right now. You need to go and just research about them. Very interesting thing they are doing, right? So you want to buy AMD, you would have seen some computers, you have AMD written on it. That means that AMD did the GPU of the computer. So these are semiconductor companies that handle chips and the things that are like the brain of the computing system. Okay, so now you have SPY. So if you want to invest in S&P 500, these two stocks right here are very good companies that mirror the S&P 500, right? They mirror them almost to perfection. You would have even heard some quotes from Warren Buffett where he says that people should buy index funds for starts. And he actually recommends his VO and SPY. But if you want to go to specific industries, if you're a tech you're a tech person like me that like tech companies, you want to look at all these QQQ. Yeah, you can go to Yahoo Finance, just Google what stocks does QQQ have. You see all those information right there. Or you want to go for Vanguard, I like Vanguard ETFs. VGT is also a good one. You can check the charts. Just Google Yahoo Finance, do the charts, check it just the way, same way I checked here. You see their performance in the past 5 years. Okay. All right. So there's also gold ETF, right? So, people listen to news and they don't really act based on what they see that is going on. So, when we're getting new leadership from Donald Trump, you would have seen that, okay, there's going to be crisis in one sector and probably the oil and gas sector is going to win. The gold sector, anytime there's crisis in the economy, the gold sector always wins. You know why? Because people feel like gold is safe. So they run to safe assets. So that means anytime people are buying something, the price will increase. So it's just simple logic. If there's going to be panic in the world during COVID, people were buying gold. People will sell their stocks or sell their house and use it and buy gold stock. Because why? They believe that gold is a stable asset. And if you look at the US reserve, it's held in gold. The US dollar is held in gold. So it's a stable asset. So if you want to also have a blend of gold in your portfolio, you want to look at gold ETF. The Wall Street has come up with gold ETF. I think it's GLD or something like that. So you want to buy those assets and have a good blend of it. I always recommend, or not recommend, but I'm not recommending anything really. I always go for 2 tech, 2 index for believers, for beginners rather. So if you're a beginner, you want to buy 2 tech stocks, 2 index funds, so that the tech stock will help your portfolio grow. The index fund will help cushion every effect of any panic. All right, moving on. So how do you make money in the stock market? Number one, capital gains. Very simple. You buy low, you sell high. Okay, and then you make your capital gains. Okay. Now the second one is long-term growth. Let's talk about long-term growth. You buy, you hold, the interest compounds, or whatever, the value compounds over a period of time. And you might want to do that for what they call growth stocks. Stocks that you believe are futuristic. I mentioned one earlier, D-Wave, right? These are stocks that right now I think D-Wave should be around $11 right now. I actually bought it when it was $1.9, 1.9. It was 1.9 in this October here. It's not even up to 6 months. And I told a couple of people to buy as well. So, right, you can check it on Yahoo Finance. So if you didn't catch it then, that's why I said that this starting early can be it can be confusing sometimes. So D-Wave at $11, still not bad in my personal opinion, because the solution they are providing hasn't really started really. So quantum technology is still going to happen in the future, maybe in the future 3 to 5 years. So $11, they're probably going to hit all these numbers of 400, and then just imagine how much you would have made, right? So that's what you want to do for, long-term growth. Okay. And dividends, very important. So you see right here, you want to also have some investments for dividends, right? If you look here, these are called dividend aristocrats. I mean, it's just their nickname for companies that pay dividend. You know these brands, this Coca-Cola, IBM, Walmart, they all pay dividend. What it means is that if the company makes like 100 million this year, they are going to share their profit to investors. Okay. That's just it. But growth companies don't pay dividend because, I mean, they are probably at experiment stage. So they don't pay you dividend. They believe that you make money from capital gains. If your stock appreciates, you make money. But established companies like Coca-Cola, they probably will not grow again because Coca-Cola share will not grow again because it's already an old company that is established. Where do they want to? They are no longer inventing that much because see that you want to drink Coke or you don't want to drink, right? But for companies that are still innovating, they don't pay dividend. For companies that are not innovating, they pay dividend. And you want to also look at real estate investment trust. I like that the real estate investment trust for dividend purpose. The reason is because they're actually mandated to pay about 90% of their earnings as dividends. So they are not paying dividend by choice, it's by compulsion. And what are real estate investment trusts? They are companies that are into commercial real estate, right? Have you wondered who owns your Walmart? They don't own the property. This is the company that owns the property right here. Realty Income. It's a real estate investment trust. They're into commercial real estate. They own almost all. I think they own about 70% of Walmarts in the world, right? So they do commercial real estate. So there are a lot of companies on this list. Some of them do. They own hotels, your favorite hotels. Some company own the building. Okay, so those companies, if you identify them, you can just Google them. Which company owns the maybe any of your hotel brand, maybe Radisson. Okay, you will see the name of the company and you ask how much do they pay in dividend? You see right there, and then you go to your brokerage app and then you buy the share or do your research first before you buy. Okay. All right, so are we following?
Yes, we are.
Okay, so we're just gonna, as we begin to learn, we're gonna talk about how to open a brokerage account. A brokerage account is basically like a middleman account, right? That's what it is. So if you want to invest in the stock market, you're not gonna go to Apple, you go to as you go to bank and you say, I want to open an account, I want to invest in stock, or you go to Apple, I want to buy your share. No, you need a brokerage account. Because by regulation, if you want to buy any share, you need a broker that will be like a middleman between yourself and the company you're trying to buy. So you put your money, you give them money, they help you buy, and then they'll keep your stock in where you can see it. So we know these companies, Wealthsimple, Questrade, Interactive Brokers, and then our banks have brokerages also, right? Scotiabank has iTrade as their brokerage arm. So the bank is there. You also have their brokerage arm, right? So normally they might not tell you these things if you go to the bank typically. Well, you need to find out who these brokers are. Wealthsimple is quite popular. They are user friendly. Okay. I always like the idea of having my TFSA. In fact, if you ask me, I think I like the idea of having TFSA in using my TFSA for stock. 100%, that's what I do. I just use it for stock investment and a bit of RRSP also, self-directed investment, right? And they also have crypto as well on their platform, right? Which is another area that we need to start learning because, yeah, some of these things are real. They've come here to stay. Okay, so I mean, the only drawback around Wealthsimple is that it has limited features for advanced investors. If you're an advanced investor, you want to start doing trading and all that, yeah, they might not give you that feature. I think there's some delay in the time they deliver all of this, but you really don't need that part if you just want to invest and keep your money. Okay, Questrade, like I said, I mean they are like intermediate to top level. Okay, they have good features for advanced orders. You can actually run this platform without even looking at it on a daily basis. So if you go to Questrade, you can place an order. You can say, okay, this week, what's going to happen this week? I think maybe Microsoft is going to drop by Wednesday. You just go to your Questrade app and you say, okay, Microsoft is 300 today. You give an instruction on the app and you say, when it drops to 280, buy for me. You place it there. That's what's called advance orders. So you make the advance order in advance. When it drops to 280, buy. the order will be there. In fact, I have some orders I placed about 3 months ago. One just hit recently. I was like, I've even forgotten that I did this thing because I was looking at the whole Canada thing. You know, we build a lot with timber, with wood here. So there's a company that handles this #1 wood industry in this Canada, and they pay good dividend. I learned. So I just placed an order for there. And recently, thing I said, this company, so it was more than 3 months. So you can actually place an order in advance, and you go about your normal business, it will buy. If you want to sell as well, you can say, okay, when it gets to this level, you sell. Those are advanced orders. So you don't need to check, you don't need to be looking at your app every day. Okay, Interactive Brokers is a bit international. They have access to global markets. These two might give you access to maybe US and Canada and a bit other major companies, but this gives you access to 150 countries in the world. Interactive Brokers, I like it a lot. Yeah, so basically, how do you get started? You just have to download the app, go to your app store, download, do your normal KYC, verify your ID, fund your account, link it. There's a way you can link the app to your bank app. Then you fund your account, and then you see the search button. You click search, and you search for the stock you want to buy. Then you that's it. Okay. Yeah. So basically, these brokerage companies are licensed just like your bank. I think they are licensed for about $100,000, just like the bank is licensed for 100K for depositors funds, right? So moving on. So this is just a step by step. I just thought to show it here. Okay, I should actually start from here. Anyways, this starts from when the app has been downloaded already, and then you open a TFSA account, and then you move money. You deposit from your bank account. You complete the deposit on this side. You then choose buy, click on buy, you search for the company, okay? When you search, the name will come up, you click on it, and then you go ahead and buy, all right? That's it basically. So I'm gonna round up by giving 10 practical tips to get started. You buy when it's red, probably will sell when it's green, okay? You have to stay within a community. Always try to find out someone you always consult. I have a community I belong to. People I always ask, actually in the US, you actually subscribe and pay good money to be in that community, because what they'll give you is more than, actually pay more than $10,000 to be there. But I've gained far more than that. When I was starting, I was like, how will I take my 10,000 and give to somebody? So, and when you convert it in Canadian, it was even mind blowing. But I knew them before. I knew their value. I knew what they were going to offer. So you want to stay in a community that gives you support. Okay. You want to diversify. Very important. As a beginner, you want to look at that S&P 500. They help you diversify even without you doing any work, right? Dollar cost averaging. This cannot be overemphasized. Okay. Do you know what dollar cost averaging is? Does anybody know on the chat box? I want to know. Yeah. If you know what it is, you can type it in the chat box. Simply, I'm going to talk about it last. Let me leave it like that. So bear markets create millionaires. Bear market is when the market is crashing. Bulls market is when it's on the high. So right now we have bears market because in the past 1 month or so it's been bearish. Okay. Bulls is when it's going high. So when it's crashing, that's when you want to buy. Okay. Be patient. Don't buy unless you need the money urgently, really. Okay. The patience will always go up. And the reason why I have to be patient is people might panic that the market is crashing. But do you know that in the past 100 years, the S&P 500 has been up, has been bullish for 73% in the past 100 years. It's only crashed about 27%. What that tells you that overall, the market is always on the high side. And this is despite wars, despite pandemic, recession, all of that. The market has been bullish for 73% of this year. That means that in nearly 3 to 4 years out of 4, nearly 3 out of every 4 years, right, the market is bullish and people are making money, people are making gains. Okay, so that tells you that you have to be patient, because even if it crashes, it's actually an opportunity to get in. Okay, know when to sell. Don't hug your stock too much. Right? The one I told you I bought D-Wave at 1.9, and recently it got to 11. I had to sell some. I had to sell about 30% of it, right? Because it's a growth stock. I actually bought it for short term. So I had to sell 30%. I know I have a feeling that it might get to like the likes of 20 or 30. But let me collect the profit first and hold that one. So, right. So know when to sell. Okay. Always, if you're confused, you can choose to buy number one or number two in the industry. If you go to healthcare, just Google who is the number one healthcare industry in the US. I like US market because I don't know. Have you guys gone to any Canada bank to tell them that you want to invest in stock? If you just go and meet your financial advisor. I went and they gave me their prospectus or their fact sheet, as you call it. So that means where they put the money. If you give them your money, where are they going to invest it? And guess what? These are two banks in Canada. 96% of their investment is in the US banks, you know. And the reason it's not far-fetched is the biggest economy in the world, and it has significant growth. Okay, so yeah, so no, buy number one or number two in the industry, so you can check who is the biggest healthcare industry in Canada, in the US, who is the biggest renewable energy in the US, right? And just buy number one or number two if you're confused. 30 minutes research every day. This one is a challenge. Number two challenge for us. How many pages are we going to start reading after today? I actually made a note to start reading 25 pages this year. Because last year I think I read 3 books, and this year I said I was going to read about 6. And I said in order to achieve that, I have to do 25 pages per day. And don't ask me if I'm meeting that that challenge. So actually, some days ago I said, okay, let me reduce this thing to 10. And let me even start with 10. So please, guys, are we committed to doing 10 pages per day? 10 pages. Who is
Yes.
it on this? Great. All right. Again, monitor quarterly. Like I said, don't get so obsessed. It can be obsessed. I mean, you can get obsessed when you put money in something, right? Just try and monitor I really don't monitor my portfolio regularly. I just try to look at it once a month. Unless I see that something is happening in the market, I want to go in and do some activities. So try and know how to monitor. Don't get too obsessed with it. Okay. All right. So I just put this here just to encourage us. My company, Invest IQ, we help people build portfolio. So you want to have your personal portfolio. Even if it's your notebook, you can write it down there. Okay. What's your income? Assuming you earn 120 family income per year, you have to make a note of your expenses. How much do I spend in bills, in food, and all of that? This is without mortgage. Okay. You now spend other things, maybe travel and all that. Okay. And then you'll be left with about 74. This is after tax. So assuming this person is left with 74K, and then you have this balance every month, where are you going to invest the money? That's the question. That is how you come up with your investable cash. And then you don't want to carry everything and put in one market. A lot of people, I like real estate, right? I think real estate is a must-have. I'm not going to put everything I have in real estate, because if you listen to the news, what happened in California, you see a lot of people lost their life investment. A lot of us even put our life in the house. We say this is the house that we use for retirement. I know somebody, if the wall has small crack, you'd be like, my retirement money, you want to go and fix it. So that's what you do when you put your money in one basket. So you want to have a bit of fixed income. You want to do stocks, 20%, in my opinion. But I don't do stock 20%. I do more than 20%, actually. Then you want to have this life insurance. This one is very important because it helps you create more assets for your family, much more. This is like paying little for more. So this is a must-have that a lot of people don't know about, right? That one is must. This is number one, this is number two, and then you want to double on these other ones with this money that is left after your expenses. And for me personally, I do a bit of crypto. I do like 5% crypto because that's how you're gonna make some good money, right? Especially if you're starting late. You want to catch up with some fast income. I know that okay, they say it's risky and all of that, but I've been doing it since 2017 and it's been here for more than 15 years. And people keep saying it's risky and people are cashing out. In fact, let me tell you, I there's a new crypto. This is not a financial advice. There's a new crypto in there. I keep saying it. There's a new crypto that came up, SRP. I don't know whether we've heard about it. Some months ago, just before Trump came in, it was XRP. Just Google them. It was around $1.2, $1.2. And I just read something. That's why it's good to read. I didn't know about it before. I just read somewhere that they have this court case that's been pending for more than 8 years in the US. And the court case is simple. The government, their federal, whatever, their CBN is preventing the crypto from, getting licensed, because what they seek to provide is to help people transfer money across countries without going through banks. That's the solution the crypto is bringing. Just like if you want to do international payments, you go through SWIFT. So they are going to make SWIFT redundant, so to speak. And because they are faster, less fees, and again, it's kind of under the radar, kind of. You don't go through the normal financial system. So the CBN in the US has been, the Feds, as they call it, has been suppressing that crypto. And I just read that Trump is a pro-crypto guy. And guess what? You just Google it in the news. You see that last 2 weeks, they dropped their case. SEC dropped the case against them, right? And since Trump won, the crypto has moved from about 1.2, actually, but when it was 0.6, that was about 2 years ago. It has moved from 1.2 before Trump to now it's around 2.5 or thereabouts. You can check it out online. Okay, so immediately Trump won, it started going up because people were excited that it's going to go up. And people are projecting that it's going to get to $20. Just imagine when something that is $3, $2.5 go to $20. Imagine what your money will do. If you put around $300 there, just imagine what it will become in the next 2 to 3 years. So, and people keep saying that crypto is there, but for now, the guys in Wall Street are investing in it. BlackRock have their own crypto. It's not even that they are invested, they have their own crypto, IBIT. BlackRock is investing. So anyway, that's not what the topic is about today. But that's just to get you excited about things that are happening in the market, right? And yeah, you can scan our QR code to keep the conversation. I also help people get started. Basic things like breaking down complex terms, setting up your account. We also have a community if you scan the QR code there. And yeah, we have an ebook we also give out, and you can follow us here on this website as well. That's it. Thanks for having me. If you have any questions, I'm ready.
Thank you so much, Uzo. Like, I was taking notes, taking pictures, doing a lot of things here. Like, it's so interesting. Money has been something that I've always been interested in, but not to the level that you've broken it down. I have a question. So, if I want to start researching a particular stock, for example, what should I look out for? I know you, the other slide, you were talking about some things, but say I want to invest in Amazon, what should I look out for?
Yeah, I think that's a great question. But before
And
then,
how do I do the research? Like, where do I start? I know
yeah,
you mentioned some resources here that we should go that we can go and look out, do our readings and all that. But how do I start? Where do I start my research from and all that?
well, yeah, good question. I think it depends on your risk appetite, really. Everything depends on your risk appetite. I'll tell you two ways to go about it. If you're If you're someone that you have like medium to high risk appetite, you can look at two things, right? You can look at the who is invested in it. Like I said, you go to I like going to Yahoo Finance because it's free. There are other paid platforms. Just go to your app store, download Yahoo Finance, right? Type in the search box Amazon, okay? Amazon will come up, and then you would see the stock price of Amazon as of today, okay? And then what I'll do next is, okay, this is a practical step now. So you go to Amazon, you see Amazon right there. You want me to show it on the screen?
Please do.
Oh yeah, sure. Let me show you.
I posted in the chat asking about the essence of signing up with Yahoo Finance.
Oh yeah, the
So
essence.
yeah.
Yeah, the essence is to use it to do research. Or is it wait? Am I getting the question wrong? The essence is
That's
to
essence too.
read up, to do your research before investing.
Okay.
Yeah, let me show you. I was just looking at some charts here. So if you go here, you can do it on your desktop as well. Yahoo Finance. If you go over here, you see that, yeah, this is just the landing page, finance.yahoo.com. And now I want to buy Amazon. Okay. I type Amazon. Okay. I have a friend that I was setting up a friend's account, and he told me that his Amazon wasn't showing the same way mine shows. If yours shows you news, it's probably because you read a lot of news on it. So you see this button here, it's already toggled on finance. They probably know that I
Mhm.
always come here to check this. So you can toggle it on if it doesn't give you. Otherwise, if you search it to bring it up, you see that right there, Amazon. So I'm a novice. I just come here, I'm overwhelmed by all these things, right? There are key things I need to look out for here. You see, Amazon price today is 192 down here. Okay. And this is for one day, in the past one day. And I say, okay, let me even see this company in the past 1 year. This is 1 year over here. Let me see what they've done in the past 1 year. And I say, okay, 1 year ago, what was their price? It's also 192 1 year ago, right?
Mm-hmm.
192. Okay. And I say, okay, 5 years ago, what was the price? Okay. You can see over here, sorry, 1 year ago is a bit lower than 192, but 5 years ago, I would have done 102% returns. Okay, because 5 years ago it was around $95. And I decided, okay, who are the guys that are invested in this Amazon? You see, you can come here and talk about everything here. This is actually where the real work is. But this, for me, I wasn't doing this when I started. The opening price, closing price, this is very important here. The PE ratio, the earnings per share, and all of this. But as a beginner, you don't want to overwhelm yourself with all of this. And I can just go and say, okay, who are the holders? I come over here. I see that BlackRock is invested in it. I see that Vanguard is investing in it as well. Okay. These are the top institutional holders. You see right here, it says that 65% shares are held by institutional investors. So it tells me that 65% institutions are really buying this company. Okay. So I can decide to say, okay, what price should I get in if I really feel like Amazon? And I know Amazon, the brand, I know their CEO, I know he's a disciplined guy, he's been making money, he knows how to make money. Okay. This is just like putting money in your friend's business. And you know that this guy is proven and you see what he's doing over here. And then I come and say, okay, let me check in the past 1 month. What is the chart doing? What is the stock doing? I see that over here, sometime in this is February, they got as high as $242. $242 in February 2025. That tells me that the stock is already selling off. There's something called pullback and correction. Pullback is when the stock drops by 5%. It's a signal to buy. Correction is when it drops by 10%. It's also a signal to buy. Some people say it's a signal to sell, but for me, it's a signal to buy. But when you stop starts dropping like 40%, for me is a signal to sell. Okay. Now you see that it got to this level, and what is driving this pullback is probably this tariff and all of this. So that means if I buy 192 and this company recovers from this tariff, this thing is going to come back to 242 and then shoot up.
Mm.
So that is it. So this is a buy signal. There's blood on the street here. That's when you want to get in, right? So that's it basically. You see where everywhere is red. It means it's the
Yeah.
time to put in the brand. The brand is a good brand and all of that. That's one way of going about it. The other way of going about it is to go and get some. I share the resources there. Go to those websites, check Amazon financials. You check how much profit did they make last year. Okay, you check how that's revenue. You check how much debt do they have. Okay, you check out of the revenue, what was their profit, how much did they keep as profit. Okay, what are the new products, are they now becoming redundant, what are the new products they are going into? Just Google it, you see it there. New products, Amazon, let me say new businesses or whatever. Okay, you see it. You see that they are launching all of these businesses. They are going into web services big time these days. Okay, and you want to see that that company has a future ambition on product and businesses they are going to launch. And then you then have to go and learn how to check the P ratio. P ratio tells you whether the company, anytime P ratio is more up to more than 20, it shows you that the stock price is actually, it's probably too overpriced. It's overpriced. That means the real value might be less than this. Okay? You want to look at other indices here, earnings per share, and see what they mean. And that's another way of going about it. The other way is just look at those first things I mentioned and you decide to do your dollar cost average. Cost average means putting a specific amount in the stock that you're interested in every month consistently, just like you pay your what's it called, NEPA bill, your power,
Yeah.
dollar cost average every month. And then your portfolio will just correct the actual price that is your entry amount. Yeah, those are the two. And then if you want, you can then decide to consult people and then they'll help you do this, do the work and do the analysis and maybe give you some personalized advice based on your risk appetite, really, because it's all about risk appetite. It's not all stocks that you can buy. If you have low risk appetite, you don't want to buy a lot of tech stocks. You can look at renewable energy. You can look at consumer staples. You can look at maybe healthcare, and I'm talking about ETFs for these market, not really individual stock. You can actually have basically an ETF portfolio. You're not buying individual stock. For instance, if you like Costco, you want to buy Costco, you can Google which ETF has the highest holding of Costco, right?
Mm.
And then it's QQQ. You buy QQQ. So if you go in here, you say, okay, QQQ ETF, you type it here. It's an Invesco ETF. It's a very top ETF. You check here, you see their price to buy one. You don't need to wait to buy one. This is old school time that you have to buy one for one. No, you can buy what they call fractional shares, right? All the brokers help you. So basically, like I said, they are middlemen. They collect your $50, they get another person $50, and then they merge it and they buy one full one for you. That's what they do as brokers. So you can actually buy $20 of QQQ. Okay. So you now check. Now let me just wrap up with this. So this is an ETF. You want to check what are their holdings, what companies do they have as their composition. You come to these holdings, right? If you scroll down here, you see that right there. Okay. QQQ, they have 49% in these tech companies. They have Apple 9.7%, Nvidia, you see that right there. So you see here, Costco, they are the ETF that has the highest percentage holding in Costco. So they have about 51% in tech. So yeah, so if you want to buy Apple, you don't want to buy individual stock Apple, you can check which ETF has the highest holding in Apple. And that will help you hedge risk.
Yeah.
All
Thank
right.
you so much. Thank you so much. I don't know if any other person has a question.
Thank you. This is more than enlightening, and
Like we
I,
should bring
I
out
have a
our wallets and
question.
start paying you because
I want to ask a question about your WhatsApp group. I just screened,
Sure.
shot the QR code, and I'm waiting for the admin to let me in.
Okay.
So, in a nutshell, what are the takes? What are the gains joining your group? I know it's free,
What are the
hopefully.
games? Yeah. Okay. Basically, we you can. So we are launching a website this week. You
Mhm.
can actually take a look at it. It's at the Invest IQ there. So what we tend to do there is to help people, like I said, break down how to get into the market, um, set up the account and guide you, walk you through the steps of setting up your account and start investing. If there's a new development in the market, we're also going to let you know that, hey, these are the stocks you should start investing in based on your
Mhm.
risk appetite. If you have questions as well, we have a couple of people that already subscribed. If you have confusion, and somebody asked me a question in the community recently about waste management. WM is a company that handles waste in the US. They're a good and stable company if you want to diversify. So we advise you based on what we know about those companies, simply to walk you just a community where you can ask questions basically, right?
Mhm.
And right there is we have it's actually a paid service if you go into Invest IQ, but the WhatsApp group is free. The WhatsApp group, I would say, is not so I don't know. It's not as active as it should be, but once in a while we do analysis of the stock market as well as the crypto. And people, if you have questions in the WhatsApp group, which is free, you can ask, and we'll be very happy to provide answers to that as well. And once in a while, we also host Lunch and Learn in the WhatsApp group, and we have programs like this that we do every 2 weeks just to enlighten ourselves, and they're all free of charge. But when you go to the website, you start seeing some paid services like setting up your account, and we have a one-time payment, and then we'll have a subscription payment for the year.
Amen.
Yeah, that's how it works.
Okay, thank you.
thank you so
Awesome.
much.
All right, I'm gonna put this
Okay.
down.
So any other
And I have one kind of outlining question, if you don't mind. I understand that many people who invest like you, they don't spend their direct earnings. So what they do, this is the dynamics that plays out. They put their money in the investment portfolios, it yields money, they withdraw it and they spend. So I've heard that strategy. Is that the same strategy that you adopt? Because sometimes I wonder how practical that is.
Okay, just to get your question correctly, they spend the yield, right?
The yield of their investment. For example, like their earners, let's say they are working and their net income after taxes like $119,000. So like you expect that at the end of the month you start to spend your earnings, right? A couple of them say that's not what they do. They take the monies that they, after paying, of course, their bills, which are, mandatory because they are recurring, they take,
Mhm.
let's say, what should be the savings and they invest it directly into their investment portfolios.
Okay.
Now, the money that they use to spend, like for everyday requirements,
Mhm.
like going on vacation, paying the children's school fees, like bills that are not necessarily like a chokehold. It's
Mhm.
something that you have to plan. It's the money, the yield from their investment that they use to offset those expenses. So sometimes when I hear about it, I wonder how. But I'm not doing that. Obviously, from my from my question, that I'm not doing that at all. But when you see these people, there is one thing I notice about their lifestyle. The vibe they give is that they are settled, they are solid when it comes to their economy. You never find them burn out. You never find them looking for emergency loans. They are, when it comes to planning their life, they are so structured. And so to me, it's given that, okay, they really know what they're doing, but how? How does the dynamic play out? So obviously, you're one of those people.
Obviously, I'm one of those people. I mean, I think that's a fantastic question. I mean, I'll just start by saying that, okay, that's just the difference between the rich and the poor. Yeah, that's it. I mean, it's unfortunate. I mean, and the truth is sometimes, and that's why I decided to. If you would have noticed, I do this out of passion, and the reason why I do it is because I've seen that this gap exists. This gap you mentioned, right? Because it's like eating your fruits. You know the parable of the sower in the Bible, right?
Telling you.
So it's like eating the seed rather that should give you the fruit. So what you do is you put the okay. For instance, I'm supposed to travel sometime this year. I knew that I was going to travel last year, and I want to travel with my family. And the flight ticket for everybody was around $6,000. I'm not going to use 6,000 and give one flight for 1 year plus ahead. I wanted to book ahead. So what did I do? I simply look for one stock that will give me good returns within 1 year. Just put it there. Am I well, maybe I'm kind of sure that I'll get that return. But am I saying that I'm 100? If I'm 100% sure, I'll probably will be a billionaire now. But I know that the possibility of making that returns is there. So I say, okay, let me put this 6K here and book this flight and be paying it small. I know that I'm going to yield money that will be sufficient to cater to part of that flight. Okay.
Mhm.
So basically, it's like sending your money on errands. That's why I told you that I don't have all these things they say emergency fund. There's no emergency fund and keep you and be waiting for emergency. No, you send the money on errand. If there's emergency, you sell and use it and take care of it. But to say that I'm going to put my money in 1% or 0.5 that they pay for savings, I put my money in savings account when I came to this country, and they were paying me $1, 0.5. I'm like, is this not wickedness? That's why I went. That's why I went to the bank and I told them, "Where are you putting your own money? The banks are putting their money in these places I showed you. They will use their money and go and put in these businesses, and then they'll pay you zero. It's, and then some of us will still leave our money in savings account. It's not. We're not being fair to ourselves because this is money we actually worked for, and it's also very profitable because the way you handle tax for investment is also favorable because it's calculated like a business person's tax, not as a
Hmm.
capital gains tax, right? So the benefits are enormous. And then if you want to also to even take it a step further, I can decide not to sell. If I have a portfolio of about, let's assume I have a portfolio where I have 50K, okay?
Mhm.
And you what you do is you can tell the brokerage company to lend you money. So you leverage your investment and tell them, look, I have this 50K with you, but give me 5K. Just like you use your house to lend money, just use your house and do some leverages, this home
Mhm.
line equity or whatever they call the HELOC program. Okay, so you can use your stock portfolio to leverage to borrow money, right? And then use it and sort yourself out. And when you pay them back as well. So basically, your investment still stays there and is growing. You always have to learn to leverage, right? So
Yeah.
if you look at the rich guys, they don't just like I think it was Jay-Z or somebody that bought a house in the US worth over um, $1 million. He just used his stock investments and he told the bank to give him $1 million, and they gave him with the stock investment as collateral, and he bought the house. But if you use your capital and buy the house, the money is gone, it's not
Gone.
coming back. But this one, you leverage it, you will just have to keep leveraging everything. If it's your life insurance, that's why the product. That's why I got interested in the product because it gives you good leverage that and the funny thing is that the good things they will not tell you. Nobody will tell you the good things in this life.
Educating.
There's some amounts you have with the bank, and they start unlocking these products for you. They start calling
Yeah.
you and start offering you, but
Yes,
they won't tell the regular guys. And
exactly.
how are we going to change our stories if we don't do some of these things? If we keep being too careful, a lot of people are careful with stock markets.
So
Yeah, go ahead.
yeah, so having said all you have, I just want to know the next step for people like us, the neophytes. Oka is already a multi-millionaire,
Oh,
investor.
amen.
Well,
Amen.
someone like me, I'm starting from ground zero. When it comes to this kind of advanced self-directed investment.
Number one, if you want to learn all these things, it can be overwhelming, but don't let. I mean, good things are not. They are probably not easy to. That's why I tell myself when something is very hard for me to understand, I feel like it's good. That's why it's hard for me. If it's easy for everybody to understand, have you thought of this whole? I was listening to how they use real estate. You do HELOC, you do a lot of things. A lot of people are not doing it. They will go and be living in one house for like 10 years. How that has appreciated that you just leverage and move on with your life. You just be sitting there and be answering a house owner. So
Ugh.
all these good moves you have to first of all be fluid. You have to make your life fluid and know that, okay, I'm just going to be able to do some new things that normal people don't do.
Mhm.
Right? That's one thing you have to tell yourself first. And then you open your mind to learning new things. So when it comes to selling, like you said, and again, if it's very difficult for you to understand, you can consult somebody. That's why, we all have doctors, right, that take care of our health. We have people that do a lot. We have lawyers. When it comes to law, we have lawyer. When it comes to accounting, we have accountants. But when it comes to our finance, we hardly have finance guys, right? Do you have a financial
Consultants.
advisor? Many people don't have. We think it's for the rich. It's not actually, because it's just like everything. You should have somebody that will handhold you through that process, right? So that's why I personally have a financial advisor. Okay, so if it's difficult for you to, it can be a one-on-one personalized discussion between you and this my group Invest IQ. But let me just run it down for you. It's not compulsory that you sell at 40%. Okay,
Hmm.
it all depends on yourself and what you feel and the stocks you have in the portfolio. There are some stocks I have. I'll give you an example. Nvidia. Nvidia actually dropped to around 105, and that's actually a red flag for a lot of people to sell. But you know that Nvidia is not going anywhere. So in that case, you're not going to follow that rule. So it's not really a rule per se. But if you have, for instance, you have like a Pepsi in your portfolio, not, I mean, in quotes, and you feel that, and the Pepsi drops to, my own rule, if it drops 50% in 1 year, I'm going to sell. Okay. So I do like a portfolio cleansing every year. Anyone that has dropped 50% in the past 1 year, I sell. And then I put the money in other ones that are doing well in the portfolio. So you can have that kind of policy, right?
Hmm.
So you basically would have some strategies that you're sticking to, and know that, look, this is my strategy. My strategy number one is that I'm going to have a blend of portfolio. I'm not going to put everything in one industry. If that industry crashes, you're going to lose a lot. If you put your money in consumer staples, if we have, God forbid, you have something like COVID, when a lot of people are at home or people don't work from home, it's going to shake your portfolio. Okay. So you want to blend it, number one. That's strategy number one. Number two is you want to ask yourself, like I said, if you drop 50%, I sell it off and take my loss. Okay. Number three is my own is if it does 5 times, if it does 5x, let's assume I bought the stock when it was $200, okay, and the stock rises to like 800, I'm selling immediately, okay. Number four is, that's my own personal strategy. Number
Strategy.
four is, okay, if I hold it for 5 years, I'm selling. And the reason why I have that hold for 5 years is because you will have noticed that every 5 years, there's usually like new technology that is coming up. There's something that will beat the previous one.
Hmm.
AI is beating the dot-com bubble. Okay, we're all here now in 2000 when the dot-com, but everybody was saying, that's when we got the WWE, that we can surf the web. It wasn't there. There was a market boom then. Now AI has come. Everybody's innovating. You can see what's happening. The fight that is happening between DeepSeek and all these companies is the AI bubble. Now, AI bubble is going down gradually, silently now. We're getting the quantum technology bubble. So you see, in the next 5 years, or within these 5 years of AI bubble, so you want to start moving your portfolio from this AI to another thing.
Mm-hmm.
Okay. So that's basically those are basically the rules I follow primarily, right? And then you keep learning. You're going to keep learning steady, regularly. You're going to keep learning, and then yeah, you grow your portfolio from there. It's not
Okay.
it's something you can do actually, because it's just because you're not in the space. If you get in the space, like I said, if it's something you always read up on, you see that information will just be coming natural for you.
For
If you
you.
hear that Trump is going to put tariff on April 2nd, you know the implication in the market.
Hmm.
You're going to know that, okay,
Yeah.
this one, should I buy this one? Should I sell this one? You know that Canada currency is going to depreciate. You know that, okay, should I move my money into USD? You know, it's just the news that we hear every day and how we react to them, basically.
Thank you.
All
Yeah.
right.
Thank you so much, Uzo. I really, really appreciate it. Not for other people, for myself. Like I said, I was taking all the notes and all that, and I'm going to be watching and rewatching the record